All right. What's going on, guys? Good morning. Welcome in. Welcome to another episode of the Profits and PJ Show. Okay, we're here bright and early in the pre-market, and yeah, we're gonna break down some charts. Today is Thursday, so we're a little bit halfway through the week, or more than halfway through the week. So consider it a halftime report, if you will. All right, so let's pull up the chart here. Okay, let's do this. So first off, you know how we always do it. We like to start with the overall market context, right? So here, as you guys, I'm sure are well aware, we've been rallying like crazy all week, or all since last week. We're in now, if we close green today, we will have 9 straight daily green days. And we have not seen this since like November of 2020, after the election and stuff. So it's been a while. It's been a while since we've had a violent rally like this. And so, yeah, as you can see, we've just been going up, right? And so now here we are kind of ranging in this 4370 level on the S&P, and right now around like this 4405 level. So about a 35-point range or so, which is definitely normal after we've had such a large rally, right? The market just sprinted to the upside basically, and now it needs to take a breather, just like kind of what would happen in an actual race, right? Same thing to the downside. If we had a huge drop to the downside, we would most likely kind of trade in a range, let the participants figure out if they agree with these prices, if they think the prices should be higher, whatever, and then we end up making our next large move. So with that being said, going into today, well, first off, before we get into today, so because we're in these like kind of balanced conditions, it's best to fade the extremes. So what do I mean by that? When the market's kind of like range bound, it's best to fade the extremes, meaning that when we come down into these low areas of the range, so around like this 4370 area, of course, it makes it even more obvious because this is a demand zone that's been holding over the past 1, 2, 3, almost 4 attempts that it's been touched. Let me zoom in now so y'all can see it better. Yeah, so this past 1, 2, 3, almost 4, and slightly almost 5 touches. Every single time we pull down into these lower ranges, it's best to want to get long, right? Since we're in balanced conditions, the market's moving up and then it moves down inside the range, then up inside the range, then down inside the range. So you just want to fade the extreme. So whenever we come down here, you want to be looking for longs. Vice versa, whenever we get up to this upper range up here, you want to be looking for sells. So if we can kind of like color code that, it would be something like this. When we get up here to this upper range, we want to be looking for selling. Down here, we want to be looking for buying. Again, it's kind of obvious since we have this demand zone right here. But even if this wasn't here, that's still what you would want to be looking for. And those are the exact same type of trades that we took both on Tuesday and on Wednesday of this week. So let me erase this. All right. So yeah, for example, yesterday we came up into the extremes. Specifically, we came up and we broke the previous day's high. And so I said in the pre-market plan, like before the market even opened, I'm like, guys, I'm looking to fade the extremes. I specifically want us to break above the previous day high, trap some late longs, and then for an opportunity to play short. Obviously, I didn't hold all the way down to this bottom. That would have been perfect. Instead, we were targeting this swing low area which is where I was able to take profits. So with all of this being said, going into today, we have a little bit different of a setup. I feel like is looming. I personally want to focus on the downside. It's going to be a little bit requiring for patience, but I'll show you why I'm focusing on the downside. And if you just look at this chart the way that it is right now, you're going to be like, what are you You're going to be like, what are you talking about? It doesn't make sense. We're still rallying. But why would I let me zoom in? Okay, we'll have to do it the manual way. All right, so if you look at the chart the way that it is right now, you're going to be like, Cam, what are you talking about? We're uptrending. We just invalidated this supply zone at 44.02. And that's true. It's true. But if you now remove this zone, I left it on here just for you guys so I can teach. If you remove this zone and you zoom out just a little bit, what do we have here? This 44.20 zone, right? Now, anyone who's been charting and kind of paying attention to the higher time frames, you know that this is a crazy zone. This is a key supply zone. Why is it a key supply zone? Because let's change the time frame here. Look at this. Now, first of all, like what even is a key zone? A key zone is one that is very meaningful, right? You're expecting to get a large reaction once the zone is tested. So why am I anticipating a large reaction when we get there? Well, the origin of the zone ended up having, let's see how many points this was. The origin started at 44.26 and got all the way down to about 43.37. So almost 100-point drop already when the zone was formed, right? But then on a second attempt, look how many points resulted to the downside from that second attempt. That's like 44.19 all the way down to 44. 300 points. A 300-point drop because of this 44.20 zone. So it's safe to say that once we get back up here, which we likely will today, sellers may or may not, it's not guaranteed, we don't know what's going to happen, but there's a good chance that we'll get up here today and sellers are going to want to reload at this area. It's just, a simple scenario of probabilities. So that's what personally I'm going to be looking for. But not just this zone alone. I'm also going to be looking for the confluences of this zone. So if we add a few more charts on here, this is the S&P over here. Check this out. Okay, at least I have my drawings. The chart's going to look not the best probably. Because I don't know why it's not like updating the styles or whatever, but the most important thing is we can still see the zone. All right, so on NQ, as you can see, we have a supply zone on NQ as well that will pretty much be hitting at the exact same time as ES. And we already rejected this yesterday and the day before, and then its origin is a few weeks back. But yes, on Monday and on Tuesday and on Wednesday, we rejected this 90-minute supply zone on the NASDAQ. And today, the S&P 500 is most likely going to hit this 44.20 zone as well. So if we look, this is the setup that I'm going to be looking for. It's for us to come up here into supply on ES, aka the S&P. I'm looking for us to come up here into supply on NQ at this 15,418 level. And then finally on the Dow Jones, I'm gonna have to take off these drawings so I can move my mouse. Finally on the Dow Jones, guess what? We're already at supply, right? So that's all three of the major indices are pretty much going to be hitting supply at the exact same time, assuming that ES can, catch up a little bit and get those last 10 points, all of the indices across the board are going to be at supply. And that's a major thing when it comes to like trading and like Confluence, is you being able to have that like the perfect timing. When multiple things line up at the same time, the trade becomes stronger, right? Makes sense. Okay, so now you guys kind of know what my main focus is for today, is the short up here specifically on the S&P. There's a chance that I play the NASDAQ. Definitely not playing the Dow, but there's a chance that I play the NASDAQ. But I don't know. Not guaranteed. It's not likely that I'll play that over the S&P. Just going to be honest. So, all right. You guys have now seen both the YM and NQ charts. So we can take that off. And now we can come back to the S&P and actually finalize these scenarios, and then we'll get you guys out of here, because I know that you need to have your own pre-market routines, right? Because we trade today. So, okay, let's walk through scenarios. So, scenario number 1, which we just talked about, I am looking for us to come up into supply, be met with selling for a move to the downside. Will the move be this dramatic? Who knows, right? Hopefully, that would be the most ideal thing, but it's not guaranteed. Let me go ahead and screenshot this for the people for later. Yeah. Oops. Okay. There we go. So that's the first scenario that I am looking for. The second scenario that I'm looking for is the following. It's kind of two scenarios built in one. But yeah, second scenario I'm looking for is for us to first pull back right around into this 44.95, 44, or it's not 44, 43.95 / 43.90 kind of like area for the pre-market here. This little like support level that we got going on. I'm looking for us to pull back into that first. This 43.90 area has been a key level for several days now, so this shouldn't be a surprise. I'm looking for us to pull back into this first, potentially, and then give us a rally up into here. At this point, I'll be looking to play long. Like, if we can pull back into this 43.90 area first before we rally up into supply, then I'll just be looking to play long into supply. And then if we get there, within a reasonable amount of time, then I'll also look to flip and play short. And of course, all of this is going to be determined by the tape. I do trade based off of order flow. I don't just blindly get in to these trades. Like, I'm not just going to be waiting for us to get up there to supply and be like, all right, we're in. There's the pink box. I'm getting short. Like, that's not how it works. I need confirmation. I need to see actual sellers on the tape. I need to watch the action, gauge who's in control, and then if everything that I'm looking for lines up, that's when I'm taking the trade. So yeah, this is scenario number 2. So again, let's go ahead and screenshot this. All right. And then finally, scenario number 3 is that I am looking basically for this similar pullback setup that we were watching for first into this 30-minute demand here, and then looking for a bounce up into supply. Now, this scenario most likely will not happen because of the fact that the range, like the trading range, would just be so large. Like right now, if I had to gauge which one is the most probable, we're most likely going to get scenario 1 first, since we're already rallying in the pre-market, And especially when the market opens, we've been rallying every single day. So people are already going to have that long bias of like, oh shit, here we go again. Like, let's get in longs as soon as the market opens. So we're most likely probably going to rally up into this 44.20 zone first. So that's automatically what I'm going to be watching for. If it doesn't happen, obviously I'm going to be able to adapt, right? The market is like an ocean, you just kind of go with the flows, but I am anticipating us to get up to that 44.20 supply zone first. In that case, we're going to be going for scenario one. Is it guaranteed to happen? No. Would it be great? Yes. And yeah, so those are the three scenarios that I'm looking for. And so now you guys know what's next. We have to actually formalize this. We have to pull up the Discord and then actually get this in writing. So here's our pre-market plan tab. This is where I post every single morning. What's going on, Andrew? I just noticed you over there. And then I need to change what I'm sharing with you all. Okay. Let's see if I can. Look, he looks better the other way. Whatever. Nice. So morning. All right. So let's go ahead and get into this. So, of course, I gotta do my little template, make it look cute. Oops. Not that. This. There you go. It's so hard to type while I'm standing at this angle. Trust me, I don't actually look down when I am typing normally. All right, so let's just go through the scenarios to the upside. And then let's walk through them one last time. All right, so again, what are we watching for? Let's start with the downside because that's the main plan. To the downside, what are we watching for? Like I said, we will first be watching for the rally into 44.20 supply, right? So first I'll be watching for a rally into 44.20 supply above. I am anticipating sellers to step in and reload their positions, as this is a key supply zone with major reactions in the past. First target, we didn't even talk about that. So of course we need to have our targets to the downside. So our first target for this will be 4,400 even. That'll be a good place to scale out, followed by 43.90. Again, the key level that we've been seeing the past few days. And then if we can really get some volatility and volume to the downside, finally 43.70. That 43.70 demand zone that's been holding for weeks now. Not really weeks, 8 weeks. So that's the main downside plan. To the upside, however, I will be watching for a pullback into 43.90 first to be defended by the bulls. If so, and the tape confirms this, I will be open to playing longs targeting 4420 supply of. All right. So that's pretty much it. Again, for the downside plan, looking for that initial morning rally up into 4420. Most people are going to chase that. We've been rallying for 8, we might even start this day off again with like that initial rally. People will likely be thinking, oh, this could be the 9th day in a row where we're rallying. We're going to trap those late longs. And then I'm going to be looking for sellers to step in at 44.20. Not exactly at 44.20. It's like a 10-point zone. So they could come in at different points, or they might not come in at all, right? The rally is strong, so it could be invalidated. This whole thesis could be thrown out of the window potentially. But again, that's what I'm going to be watching for. And then for the upside plan, like I said, going to be watching for that pullback into 43.90. 95 to 90 like range. It's been holding for the past few days. So we might have some folks taking profits like at the open. We might pull back into that, but I do ultimately at least expect a test of 44.20 today. Whether or not it gets rejected, I do think that we'll test it. So if we pull back into that 43.90 area, I will be looking to play longs up to the upside at that point. So yeah, that's pretty much it, man. That's pretty much it. Let's get you all back over to the chart really, really quickly. And then we'll be done. All right. So yeah, let's just draw these scenarios one last time so that everybody's on the same page. So scenario 1 is this. And this would be TP1 right here. Actually, TP1 would be this 4400. And then final TP would be in this area for the downside plan, right? So this is scenario 1, right? Let's screenshot this for later. My drawings aren't showing? No way. I've been drawing this whole time. All right. I have a solution. Okay, so scenario 1, we are looking for a rally up into 44.20, and then for us to come down here into ultimately this demand zone, and our TP would first be this 4400 area, followed by this 4390 area. There we go. Followed by like this 4390 area, and then ultimately this demand zone down here. Let's change the color of these and the thickness so everyone can see. All right. So this is kind of what I'm looking for in scenario 1. And then scenario 2 would be for us to do one of these here. All right, so scenario 2 would be for us first to pull back into this highlighted zone here, and then for a rally up into this. So this is scenario 2. Like I said in the pre-market plan, looking for bulls to defend this on any pullbacks that we might see before we end up going up and testing that 44.20 supply zone, which again, I do think will be tested today. Will it be defended? I don't know, but I do think that we will end up hitting it at some point today. So keep your eyes peeled. That's pretty much it for this one. And I will see you in the market. Good luck today if you're trading, and just follow your plan. That's all that matters. Win, lose, or draw. All right, folks. See you all in the next episode.